The last video was more of a focus on the Canadian side. This time we are diving in on an American example. If we're just meeting for the first time, my name is Ronnie. I'm a Canadian and American CPA with the sole focus of helping creators maximize their wealth through efficient tax planning. Now let's dive right in. We have a content creator named Jay. He's from New York. He's netting 100K in business income, all right? And being in New York, he's getting taxed, all right? He's getting cooked. Like these rates, they go up. They start at 4%. They can go as high as 10.9%. And this is on top of the federal rates. So on 100K of income, total tax of 22,000, he's getting a fifth of that. Deducting is a simple concept where we showed it with the Canadian example with Sally, where we want to reduce our taxable income and show less taxable income legally to reduce our tax owing. Note here that the goal here is not to get a refund, because we do not want to get a refund. We do not care about refunds. Refunds are not the goal here, because all that's saying is that we overpaid in taxes during the year. Our goal is to minimize legally our taxable income to pay the least amount in taxes. Jay is a content creator. Now, Jay has expenses throughout the year that he probably hasn't captured. We could probably think of a few reasons why. Maybe he's not maintaining books. He's just focused, go on creating content, which is fine to a certain extent, but we always have to remember that as a creator, you are a business owner. You have to manage your finances accurately. And once you do that, you start leveraging more of these expenses to reduce your tax position to ensure that you're paying the least amount every year. Let's say on 100K of income, Jay spent a lot on equipment needed for content creation, going to a lot of conventions for content creating, spent on courses to improve his marketing, to improve his pitch, to improve, he hired a vocal coach, or he hired someone else. If he's a gamer, he hired a gaming coach. Those are all business expenses where if you're earning income through your content, whether it be gaming, whether it be streaming, whether it be cooking, whether it be food reviews, whether it be anything lifestyle related, and obviously check this with your accountant because it varies case by case, right? Me saying this does not constitute legal advice. The burden of proof is on you to show that this was a valid business expense, but he will be able to reduce his taxable income. And assuming, same with the last example, if he spent 50K on this and his margins are 50%, his taxable income is now reduced to 50K. And when we're taking in his standard deduction of 14K, QBI deduction of 20%, and all of this, we've effectively gone from a tax position of owing 22,000 to owing 8,000. Now we could do the math on that, but that's the simple yet effective way that the deducting tax strategy pillar works. It's the easiest pillar. It's at the bottom of the totem pole. But for a content creator who's just starting out, this is an important tax strategy that you can leverage. Talk to your accountant. You can do this yourself, but obviously in the creator space, some of these deductions are going to require a little bit of skepticism and making sure that you're doing the right thing. But that's the concept right there. Next videos, we're going to talk about 4 more concepts. There's 4 more pillars to go. If this content was helpful, save this, share this, stay tuned, lock in, attach your seatbelt, because we're going to be posting a lot more content. We got 4 more pillars to go through, and this was the bottom of the totem pole. The next 4, they just keep going up in value, right? Deduction is, you're spending 1,000 to save 200. So like the benefits, they can be a bit debatable, but we want to get into the ones where like there's dollar for dollar savings. We want to get into tax strategies where you're not just getting a deduction, but you're getting an appreciating asset off of it. Make sure you tap in. My name is Ronnie, and I'll see you guys in the next video.